How are you now? James Whelan here. Whatever it is that I do from Investor Pulse, from Invest House, small caps, everything that's there, bringing you the Theory of Thing investment podcast. I am getting there one step at a time. It is a beautiful Friday morning from sunny Brisbane. I am joined here, as always, by my partner in crime, Heath Moss of HLM Investments. Heath, how are you now?
Very good, mate. Very good, mate. And it's not too bad here in Adelaide at the moment. A bit cloudy, but we're going to get our swimmers out over the weekend and the boats out. Apparently on Sunday we could get as much as 80 millimeters of rain, mate. We're all going to drown if that's going to happen. We can't handle that here
Is
in
it one of
Adelaide.
those ones where the media is calling it it's got a special name for it, like a bomb or something like that?
Some big rain event or something.
Yeah.
I don't know. But yeah. See, this is what my problem with the media. They got a prediction of 10 to 80 millimeters on Sunday. I mean,
That's a lot.
If you and I,
That could be nothing.
if you and I worked with such ranges, I mean, we'd lose our job straight away.
Well, the Jim Cramer thing. Look, this stock could go one of three ways.
Oh, the Jim Dex.
This stock could go, and he's done it. This stock could go one of three ways. It could go up for these reasons. It could go down for these reasons, and it could stay flat for these reasons. It's like, well, you can't beat the best, mate. You cannot beat the best. So you're gonna get a lot of rain.
Yeah.
Apparently Sydney's been dumping down as well. We're getting a light speckling up here in Brisbane, but nothing too amazing. I'm getting warnings that I may not be able to land.
No.
Back in Sydney this afternoon. Yeah.
They don't want you.
Another day in Brisbane. It's been a very successful journey up here, which is great. Caught up with a mate of mine in the advisory space, advising athletes at the moment, and talking about a few footprints. We've got, the part of my job is we've got the Investor Pulse platform and the portfolios that sit on there.
Mm-hmm.
Mark El-Zayed, CIO, who manages some amazing portfolios. I think the balance does about 20% a year, or he has done over the last 5 years. It's been a good 5 years, so don't just calm down. And so I'm just going to try and get that slotted into places. It's part of the reason I'm up here. That and some other bits and pieces. So yeah, just talking to planners, talking to advisors, all that sort of thing. Getting it rated at some stage, and it's all just a beautiful thing that someone who's in distribution does, being able to talk about that sort of stuff to people. Another little announcement on the other hat, small caps is today. It's going to be announced via RIU that we are media partners with RIU. I'm pretty stoked about that.
Congratulations.
Yep, that's been a lot of work, and a lot of work that we did in Fremantle. A lot of work building the small caps app that integrates well into the RIU conferences. So really happy to be working with them in the future, and they've got a big conference coming up over the next thing. So it's all go mate. I've got a meeting with AMEC in about half an hour. So how are you going? How's your week? Anything else?
It's pretty busy week in terms of client work. I went away to Watheroo here in South Australia. I don't know if you know that place, but small. Actually, it's not that small. It's about 4,000 people, but it's where all the grain and that leaves South Australia. We've got massive silos and a massive jetty out there, which we did some fishing on. And
Nice.
a little child caught his first ever fish, so he was really pumped.
What sort was it?
Whiting. The first one he caught was an undersized whiting, so I had to throw it back. But then he caught another 3 or 4 trumpeters that obviously are not very good, so we chucked them back in as well. But he was absolutely pumped. He got pictures and videos sent to his class so he could show his classmates. So yeah, it was a pretty special moment. But it was really relaxing. Great weekend on the beach and jetty fishing and that stuff. So yeah, I'm nice and relaxed, ready to move forward into March already.
Yeah. Oh my goodness. Yeah, I know February's almost over. I've got to get, what is it, the 27th? Oi. Yeah, I know. I've got a lot to do. Mate, that is amazing fortune that you get to spend that time with your son. What a great country. What a hell of a moment.
Fantastic.
Mate. That's incredible.
Yeah.
Get out there and see what's happening out in the bush, ladies and gentlemen. Anything, don't stay in your cities. Mate, let's go snappy. What has been happening with the market? I'm seeing that it's the Magnificent Seven is deeply, and I don't want to say undervalued, but relative to the unmagnificent 498 and the 493 maths. It is. What have you got for us there?
Yeah, well, just at the moment, I mean, I've got the S&P 500 up on the screen, trading in a really tight range, since about mid-December. We had that fall off just before Christmas. But since then, it recovered a bit. It's trading in a really, really tight range. I think it's the tightest range in 60 years, I read. So this is the S&P 500. So generally, when these sort of patterns happen for a few months, there's a really good breakout to the upside. Most of the action and the falls, like you said, have come out of tech. I think I think Meta's the only one that is positive for the year, and that could have changed last night because Nasdaq came off a bit. But the SaaS space is still obviously struggling at the moment with this concept of AI disrupting everyone. We had Block come out last night and say they're shedding, I think it was 4,000 jobs or something like that.
It's a lot of jobs. Jack
Yeah.
Dorsey has announced.
Yeah. Yeah, and I mean, it's in a lot of this so far at the moment. A lot of this is limited to disruption. I mean, job losses in the tech space, which means the tech space in terms of jobs wasn't big to start with, so it's quite limited in terms of its impact on the economy at the moment. But where it is starting to hurt is those entry level, low level jobs. People are not doing them anymore. Like for a tech company, I saw a stat pre-COVID, over 50% of new hires were for entry-level positions. That's now 7%.
Yep.
So, and the advertising for such jobs across the board, across every industry, is well down in the US.
Sure.
That's where it's being felt the most at the moment. And it's these SaaS companies that have to come out and say and prove to the market how AI is complementing their business and how they're using it to win new customers and improve their business rather than disrupting. Because if you're going to be disrupted, you're going to get smacked down. Like, I mean, these companies like Monday.com and Atlassian has been lost 50% this year or something along those lines, and it was already down quite a bit. So your company has to have a moat, has to have high barriers to entry, and has to use AI to complement it rather than disrupt it. So,
and going with that theme too, and I've been talking about this a lot, is that there's a really good tweet that if you have a look at it, it's from Divyam Khandelwal, who is a autonomous agent. What is he, teaching machines? He's just one of those thinkers, talking about PE associates, private equity. PE associates getting paid $200K to basically build Excel models, turn those models into PowerPoint decks, and then email those things to someone senior. All of that, and he runs through this beautiful tweet that he put out: 80-hour weeks, going to 2 a.m. That was all the process. There's now no path for the analyst space because that is literally a very replaceable role.
Exactly. Yeah.
Take data, put it to presentation, send it to someone. That's a piece of cake, right?
Yeah.
There's no path for an analyst to come in and then move up to partner. He finishes it beautifully here. PE firms won't disappear. Deals still need judgment, relationships, taste. But the 80-hour work weeks spent formatting slides at 2 a.m., that was never judgment. That was hazing disguised as finance. And AI just made hazing unprofitable. I love that end. That is such a great quote.
He's called him out. Fantastic.
Hazing, it is exactly that. It's like if you can go through that test and go through the paddling, then you've earned your stripes. So if there's no one who's doing that, this is sort of talking about industry wide. This isn't a market commentary, but just talking about there's no one to go through this process and take that next leadership role if they're not going to. So it's sort of it does raise a question of what the next stage is for this thing, because if no one's getting trained up as an analyst to do those time and do that hours, who's going to be the guys that are checking what's coming out of AI to actually get the deal done?
Exactly.
How do
you get that next generation through and pass on that experience? The next generation are going to have to, skill themselves up even more so they can get into these companies.
Yeah.
Leapfrog where they would have entered beforehand, so that they eventually can all this knowledge can be passed down to them, because we still for decades we'll still need people like that. But I think if there's going to be a blow up in the markets, I think it's going to come from that private equity space. We saw Blue Owl during the week having to sell some assets, 1.4 billion of assets, and 23% of all funds in private equity are exposed to SaaS. So if they can't get those companies sold off or IPO'd or, get out of those companies, exit those companies, there's going to be a lot of liquidity issues. So I think where
do you think they're going to dump them onto, Heath? So you get 3 guesses and the first 2 don't count, mate. Who do you think they're going to offload this crap to?
Mate, mum and dad investors.
Starts with an R, ends with an E-tail. And you know that's what they're going to do. And they are.
Yep. They're just going to wait for the market to get hot again. For IPOs to get hot again. We sort of had that last year, but it simmered down. It'll be interesting to see, if SpaceX, etc., are still thinking about IPOing this year, given, the tech and the bearishness around tech at the moment. So,
I think that's tangible. We've said this before. If you've got a moat, like a tangible moat, then you're good to go. If you're easily replaceable and internalized system, then you're not.
Exactly.
It's the Monday theory. It's just an internal system. You just use it. That's replaceable. But if you actually need, you know, satellites in space, harnessing whatever the hell it is that he does,
Yep.
right? So
Yep. Yep.
that's a thing.
And it's ironic that last night on the Nasdaq, Nvidia got sold off 5 or 6% on the back of extraordinary earnings, and Salesforce. Well, earnings were okay, but it didn't beat a whole lot. We're up 4 or 5%. So it was a weird one last night where you saw a SaaS company, Salesforce, benefit from their earnings, even though there wasn't too much in it, versus Nvidia, who blew it out the park. So anyway, we'll have to move on. But anyway, so that's the S&P 500 in that tight range, tightest in 60 years, normally leads to a breakout higher. So watch this space. Russell, that's looking very much the same. Bit of a tight range being formed there, almost an ascending triangle sort of pattern happening there. Looks good for an upside move. I will show you I know we don't cover the Australian markets too much, but I will show the XJO, because the bloody XJO is a champion. We're at bloody record highs. You look at that.
What's been driving that specifically?
A rotation into resources and financials. We're going through the half yearly reporting season at the moment. We came in way too pessimistic. The banks and the resources companies have blown it out of the park with earnings. I think Morgan Stanley said at the start of this week, so it doesn't include everyone that's reported this week, that Beats is 1.8 times more beats than misses this financial reporting season, which is quite a big ratio for the XJO.
Sure is.
And the volatility's back. If you are a winner in terms of beating the market, your average one-day move is 3%. But if you miss, you get sold off 6% this reporting season, which is double the amount of last reporting season. So
I love that sort of stats. Yeah, you're getting punished. Okay.
Yeah, getting punished. So the XJO doing very well. Obviously, hard assets and financials are going to benefit from AI. I mean, hard assets, copper, etc., are going to build out AI, and banks and that become better, leaner businesses with AI. So, and healthcare and discretionary retail have suffered a bit. CSL's been sold off a bit, but your old mate here is starting to buy some CSL, as I announced in our group the other day.
Yep.
So moving some money out of BHP into CSL simply on valuation basis. BHP looks really expensive at current levels.
Just even relative,
yeah, even with elevated copper prices, looks quite expensive here. So I'm just taking some off the top, not exiting fully, just taking some off the top and putting it into CSL, which looks pretty cheap down here. One thing that's not talked about a little bit at the moment is the 10-year in the US has slowly crept down. It was about 4.3%. It's now right in 4%. The 30-year mortgage rate is the lowest it's been since, I think, mid-2024, I think. So maybe some of those policies that Trump have brought in with the buying of those mortgage bonds through Freddie and Fannie Mae, Freddie Mac and Fannie Mae, is that right?
Something like that, yeah. Freddie Mac, Fannie Mae.
Yeah, accelerating the buying is helping. Obviously, these guys do that all the time anyway, but knowing that there is, a flaw there and someone behind you, the government basically behind you, probably gets a lot more people in that space. So the 10-year has come down. Funnily enough, now, though, they are saying there's going to be no cuts in the US for the rest of this year. There's no cuts priced in. So interesting. The 10-year is coming off, suggesting things are softening, whereas, the market's saying no more cuts. So interesting space. US dollar recovering a little bit, not much to talk about there. Gold and silver continuing to recover from the massive sell-off we had a couple of weeks ago. Gold around 5,200. Silver, where are we? Silver's back up close to $90 an ounce again. I was thinking that this thing would come down to $50 to $60 again, but it looks like it's going to go on its merry way, slow growing upwards. And we know the fundamental supply story behind silver anyway. Copper. Now, copper, I want to talk a little bit of copper simply because of BHP and how I said I'm exiting a little bit. Copper price has done really well. It's recovered from about $5.70 a pound to back up to above $6 a pound. Mm-hmm. But copper stockpiles are at 23-year highs. They're at 1 million metric tons. Yeah. And that's across all exchanges, the Shanghai, the London, and the COMEX. So there has been a rapid increase in stockpiling. We've seen Chinese smelters processing of copper is down 8% for the year so far. So whether that is a structural thing or whether that is general softness in the Chinese economy, I'm not sure. But I'm worried that if stockpiles remain this high, this price of copper is going to come off eventually.
Yeah.
And that's where we'll see the softness in BHP in that. But
Yeah.
on the other hand, we have China saying we want to double our stockpiles in copper, and the US saying we are going to start, a copper inventory. So it could be part of that as well, but I'm not too sure. But I'm just taking, like I said, some money off the table there.
Yeah.
And
Okay.
if copper came back down to between 5 and 550, I'd be a big buyer again. So
Yeah,
yeah.
for sure. I mean, and our guy has put out a note on copper, and I'll put that. Have a look at the small caps website.
Yep.
He put something out which is pretty cool. Where is he here? Research. Yep, that's where he's put it. Which is very good. Yeah, he's good at that. So where are the new copper discoveries? He's got, what's he done in here? Where are the new copper discoveries? There you go.
A lot of it will come with South America, I think. Brazil, Argentina. There's a lot of copper to be found there. They're a lot more friendlier in terms of mining now.
He's got Austral Resources, AR1. The boys went for a visit up in Mount Isa the
Yep. Yep. Okay. Fantastic. We sort of haven't seen a sort of a frenzy in copper, like a bubble in copper, like we saw with lithium, rare earths, uranium back in the day, etc. We still haven't seen that environment in the copper spec space here on the SJO, which tells me, I think, even if there is a correction, there's a lot of room to move, because especially once these, you're at the end of a move when all these spec plays only have to mention that they're sniffing around for copper and their share price goes up 50%. Which is what has happened in previous, cycles with all these metals. So, I'm looking out for something like that, which seems a long way off at the moment.
Yeah, okay. All right, I've got to get to this meeting. What else have we got here, mate?
Mate, I'm done. AFL returns with practice matches this week. Isn't the NRL back in full season this weekend?
NRL's got its 2 Vegas games on Sunday, and then
Sunday?
kicks off the
Beautiful.
rest of the round at the end of next week. I'm thinking that the Newcastle Knights, as outsiders, can knock over the Cowboys for the first game. That's at about 1:00 Sydney time in the afternoon. I do know that some of my former team members are over there enjoying themselves with client funds. No, that's anyway. I'm not going to comment on that. So yeah, that's and I look forward to it. That Vegas thing. I was talking about whether I'd do it again. There's no way that I'd go and do that again. It's a nice novelty. You've done it once. You tick the box and you don't go back. Unless I was going to spend time on site with Dateline or Loxley, there's no real reason to go and to go back over there again. The thing is with a mine site that's not actually drilling or anything like that, you go, okay, there's the pads, great, go home. It's literally just like rock, and you can see it, but you got to go out there anyway. So, mate, have yourself a good weekend and a good week. I'll try and upload this from wherever I am. I've got lunch with a really good mortgage broker mate of mine, Ben, who is the guy who got me my first ever loan, and he's referring some business to us, which is great.
Fantastic.
G'day, Ben Anson. If anyone wants a really good mortgage broker, let me know, and I'll link you into this guy. He's sensational. He's the king dingling up here in this southern part of Queensland. Hey, we're going to the Story Bridge Hotel.
Fantastic.
Which is, I was just like, I've added, said somewhere cheap for a burger. Let's just settle in and get some stuff done, and then off to the airport, flying home. Get home by about 6:00. I will hug my wife immensely. I've spent way too long away. When you're just like too long away, you just want to come home like you come back from, it's like that. I'm not traveling for a very long time after this too. So
fantastic.
Mate, have a good one.
You too. Safe travels.
Thanks. Hey, stay safe, everyone. Talk to you later.
See you later.